Hello and welcome to Energy Unplugged by Aurora. This podcast features various experts from Aurora having in-depth conversations with key industry leaders, policymakers and academics from all over the world. It explores the hottest topics across the energy market and gives a unique perspective on major energy issues.
Hi listeners, and welcome to Aurora's Energy Unplugged podcast. My name is Ryan Alexander. I'm the research lead for European power markets here at Aurora, based in Berlin. And I'm really excited to have two of my colleagues today giving all of our listeners a sneak peek into our European battery markets attractiveness report that we are releasing at the moment in Europe. So firstly, a warm welcome to Eva Zimmermann, who is the lead for flexibility in the team covering flex-related topics across Europe. Welcome, Eva.
Hi, Ryan. Thanks.
I'm also joined by Guillermo Ríos, who is one of the lead authors of the report and has been up to his eyeballs, so to speak, in developments in flex markets across Europe over the past months. So welcome, Guillermo.
Hi, Ryan. Thank you so much.
Cool, guys. So let's get into it now. This is the third edition of this report, so it's really exciting that we are publishing it again. And the question that is on everyone's lips is, well, who's on the leaderboard? Which are the top markets in Europe? And I'm going to ask you, Eva, to explain, give us a sneak peek. Who are the top three markets in Europe from Aurora's perspective?
Great. Yeah. Thanks a lot, Ryan, for this question. With this, you're digging right into the heart of the report that we just published. And I think I don't give away too much if I say that three most attractive markets are Great Britain, Italy, and Irish single electricity market, short ISM. It doesn't come as quite as a surprise, right? Because these markets have been viewed as rather attractive by the market for quite some time. However, I think it gives you great insights into what makes a great and attractive market for battery investments. And also it is quite interesting to look at how these markets are differing, right? And there's still all of them are attractive. I think what all of them have in common is that the fundamental outlook on how the power markets in these markets evolve is that there will be rather solid spreads for different reasons, right? On the one hand, it's because of it's an island grid. In Italy, it's mainly because of the great solar resources. There is a really good regulatory framework with strong policy support. And there is and all of them is some form of capacity market remuneration, which gives investors a long-term contracted revenue, which is very important if you invest in such a new technology like batteries. However, obviously, they also differ quite a lot, right? Just if you picture all three of these countries. And this is also the reason all of them have different strengths, so to say, and there are different reasons for each of them why they are so interesting and so attractive. In Great Britain, it certainly is that a country is an absolute forerunner when it comes to batteries and battery investments. This is the country in Europe with the most capacity installed and the most capacity in the pipeline. So there's just a lot of volume to invest in. Whereas there's barely any capacity in Italy right now, and still it is a super attractive market, which is really based on good capacity market remuneration and good project economics due to really good spreads in the future. And Ireland, on the other hand, ISM is a really small market compared to Great Britain and Italy. However, we can see really high returns in ISM, which pushes this market up a bit.
Very interesting, Eva. And it's really amazing to see the diversity in the kinds of markets that emerge as the top three for Aurora this year. But I think we have a lot of listeners, as you can imagine, in Germany, and I think they're all going to be scratching their heads asking, where is Germany in all of this? And how has Ireland managed to get ahead of Germany? So what is your response to those perhaps agitated developers or investors on the podcast right now?
Yeah. So to all of those scratching their heads right now, I would say don't worry too much. Germany is still very high up the ranks. It just hasn't made it to the top 3 in this edition. I think 2 major points actually pushed Germany down a bit compared to the countries that we see in the top 3. And one of the major reasons is that for a really long time, Germany was lacking a good political strategy to support battery deployment. Also, a different point, for a really long time, batteries couldn't receive any capacity market remuneration in Germany. So no long-term contracted revenue, all the revenues you can make with a battery in Germany based on markets which are rather nascent and very volatile, which comes with a lot of insecurity. However, I think if we do a 4th edition of this report, I think the picture might already change because there have been really recent developments in the German market. The government has published a storage strategy. It is not nothing concrete yet. No legislation has followed, but there is a strategy in place with many follow-ups. And if they follow up on them well and thoroughly, I think nothing can stop Germany to rise to the top of this ranking, right? And also, which news that just spread this week is that most likely Germany will introduce a capacity market mechanism. And this is most likely really good for batteries because it is likely that batteries will have access to these payments. So Germany is not in the top 3, but I think the developments in the country are really promising.
Thanks, Eva. Guillermo, I'm going to turn to you now. It's the first time that you've worked on this report at Aurora. Just curious, what's your key observation or takeaway having done all the analysis and gotten to know all of the flex markets in Europe and their strengths and weaknesses?
Sure, Ryan. It is my first battery report looking at 24 European countries and looking at really different metrics. It can be quite challenging to actually compare countries in a quite justifiable and basically in a fair manner. So I would say that what Eva is saying about Germany is really right. So a lot of things can happen in the rankings if you consider the weights, for example, in the policy section or in the market environment or in business cases. A lot of things can happen in the rankings if you give more importance to one or the other. So that I think is quite challenging.
Well, that's a good segue to my next question, Guillermo, because we have a leaderboard here ranking the markets from top to bottom. But is that going to look the same for every investor or developer?
Yeah, definitely not. I think one of the key things to consider when looking at the report and in general when looking at the top markets to invest is the risk profile. So how much risk do you want to take when doing this kind of investment? For example, if you're looking for a larger portfolio you want to invest in a lot of volume for batteries, for example, you may prefer to go to a more mature and even bigger markets, such as Great Britain, which is also actually in the top 3. But you could also invest in Germany, which Germany has also quite mature market in several technologies, and it's getting, it has already quite a lot of installed capacity compared to other European countries, as well as, I think, a lot of market depth. So there are a lot of need for batteries there in Germany. At the other side, if you actually want to invest in a smaller portfolio looking for basically high and quick returns, you may consider options such as, for example, Ireland, the ISM, or even the Nordics, which the Nordics are experiencing very, very high frequency response prices at the moment with really high returns. So if you were lucky enough to be an early mover when basically we experienced extreme natural gas prices in 2022. Another, I think, relevant point for investors to consider and based on the risk profile is basically long-term contractability. So investors and developers in general have the option always to participate in capacity markets where it's available. And that certainly can reduce risk, but that often means that you will get less reward. So that is something really important to consider. And I think my last point on the risk profile would be about mature markets. So I already mentioned that Great Britain is a mature market and quite a big one as well. But besides all the benefits you can get from a large market depth, you can also have benefits on some strategies in mature markets, such as the option to contract route to market providers, for example. Route to market providers optimize your assets in order to basically get maximum profits. And route to market providers can offer you different levels of risk depending on how much risk appetite you have. So you could go for fixed prices, for example, or variable prices for them. And yeah, I think in general, the rankings in the report could greatly change based on the risk profile of investors.
Yeah, really interesting. Thanks, Guillermo. And it's a good insight into the diversity of markets and the fact that really one size doesn't fit all, that there are different strategies to enter those markets, and they will differ depending on your risk appetite. So let's just zoom out for a second. We at Aurora have our own power market modeling tool. Power market price forecasting is our bread and butter. And in this report, we also take the results of the modeling of all of our teams across Europe, and we aggregate that to form a view on how battery markets are going to evolve in Europe across the coming years. So, Guillermo, give our listeners a bit of an insight into what's happening with the market size of batteries over the longer term in Europe.
So, Ryan, I'm actually going to give a bit of insights from the battery report to answer this question. Yeah, the market size of batteries in Europe is expected to increase greatly by 2030 and by 2050. We expect a growth of around 7 times the current installed capacity by 2030. So in around 7 years, which is actually a really, really high figure to be speaking about, going from around 7 gigawatts of installed battery capacity to almost 50 gigawatts in 7 years' time. I think basically the main drivers for this growth are renewable penetration in general, I think in European markets, the phased out of thermal power plants such as coal, and in some markets nuclear as well, and a lot of support from policies, which could be in the way of an auction, capacity market, or some other kind of subsidy or incentive. One notable example is Italy. Italy is actually expected to grow significantly by 2030, going from less than 200 megawatts of installed battery capacity now to around 10 gigawatts in 7 years' time. And this is driven mostly by policy schemes such as their capacity market and a really, really interesting auction that's happening in this year.
Really interesting, Guillermo. It's amazing to think that a market is going from a standing start effectively in terms of battery capacity, and it's going to emerge as, according to our projections, one of the biggest markets in Europe by 2030. So, Guillermo, you touched on a few different regulatory developments. I'm going to turn to Eva. Eva, what would you call out as some of your personal favorite regulatory developments in Europe across the past 12 months for batteries?
Yeah, so basically I have 3 points here. First is access to capacity markets and capacity market remuneration. Second is access to diverse revenue streams. And the third is abolishment of roadblocks regarding the grid and grid fees. To dwell a bit on the first point, capacity market remuneration. Batteries are a rather new technology, and therefore investments, of course, come with a bit of uncertainty. And if you manage to secure capacity market remuneration, you have a long-term contracted revenue. And what we saw in the last few months or in the last year is that this access to this revenue that is rather secure really improved investment outlooks for a couple of markets in Europe. Among this is Italy, which we already mentioned as one of the top 3 markets, but also markets that are ranging a bit more in the middle of our ranking, for example, Poland, got way more interesting to invest in because there's an access to a good capacity market remuneration. The second thing is access to more revenue streams, especially services for the grid and helping to keep the grid stable. If you imagine what the battery does, of course, it charges when the sun is shining, the power is cheap, and when we all get home in the evening and turn on our devices, power demand goes up, prices go up, but the sun is not shining anymore, and this is when a battery sells the power again more expensive. Batteries do that, but they actually do much more in the European power system because they help to keep the grid stable. So they help to make sure that deviations in demand and supply are always balanced and leveled out. And one important development here, for example, would be the expansion of Picasso, which is a European platform to do such balancing, which is quite favorable for batteries. And I would even say for the full power system, right? Because batteries can provide the service really quickly, really cheap, very efficient. And in the end, the whole power system gains a lot by batteries being able to access that. And last point I would like to shed a bit of light on is roadblocks or bottlenecks regarding the grid and grid fees. We still have the situation in Europe that the grid can be quite a bottleneck for batteries because sometimes it's hard for developers to even get access to the grid. And also usage of the grid can be very expensive for a battery. And if your business model is to charge and discharge power, of course, usage of the infrastructure you need to do so is really important. And I would say it's still something to watch out for. There have been countries where we saw some notable improvements. For example, in Germany, legislation was passed that continued to free batteries from grid fees for a couple of more years. That gives investors way more security than the situation before. However, there are also countries where grid fees are still major roadblocks for battery investments. For example, this is the case in the Netherlands.
Thanks, Eva. And it's really interesting to me that you mentioned capacity markets, access to different revenue streams and grid fees. And actually, the common thread we have running through all of these is regulation. And it's, I think, a really good reminder that the economics of batteries in every market in Europe practically are really the product of good regulation, good policy, and the right settings around regulation to allow batteries to earn their returns. And let's now come back to the point on options, because this is one of the, I think, notable developments in the past 12 months in Europe. Guillermo, we've seen a massive growth in the amount of capacity that governments want to procure, so battery capacity. And this is really interesting because if I cast my mind back a couple of years, auctions for battery capacity outside of a capacity remuneration mechanism, like a capacity market, these were not really around. But we've seen a big shift in the past 12 months. So first question is, why have we seen a big shift? And the second question would be, where are we seeing that? Where are the notable developments in auctions in Europe?
Yeah, that's a really good question, Ryan. And you're completely right. In basically the past year, we have seen a huge boom of battery targets and a lot of policy support for batteries. Auctions are quite notable in Europe right now. I think that's one of the most interesting parts of doing the report, is looking at these different regulations and how the conditions are changing. I would actually, some of the most impressive auctions are happening in Italy and Greece, but we are seeing auctions, I think, in around 7 or 8 European countries at the moment. A lot of them are planned for 2024, for this year and for the next one, and even in Southeast European, which they're not having a really large procurement target, but it's still quite a step forward to having more batteries installed. I would like to talk about the Italy Maxe, which I already mentioned previously in when we were talking about the market size. So Italy is expecting to grow considerably from less than 200 megawatts to almost 10 gigawatt. And one of the main reasons is this auction that's going to happen end of this year. It's called the Maxe auction. It's really interesting because its focus is in long duration storage. So they're focusing a lot in 8-hour duration batteries, although other duration can participate as well. And they're expecting a procurement target of 9 gigawatts by 2030. That's one of the main drivers for the expected build of batteries. And the awarded capacity receives fixed payments to cover basically all capital and operational costs. And I think another really interesting auction is happening in Greece. So the government in Greece planned 3 auctions to target 1 gigawatt of storage by 2025. The first one already happened in July of the previous year, 2023, with 412 megawatts awarded. It was actually significantly oversubscribed, and with the average winning bid being considerably below price ceiling, basically showing that there was a lot of competition for this auction, and looks like there's a lot of high risk appetite for investors. The second auction is actually supposed to be finished this month in February. But I think one notable point is that they're halving the grant from the first auction to the second one. So in the first auction, they were awarding a grant of, if I'm not mistaken, is 200,000 euros per megawatt. And in this second auction, they're actually cutting that in half. So they're only awarding 100,000 euros per megawatt. And you have to consider that developers that are participating in this auction, they have to have a battery project operational by 2025, which is quite a tight deadline. So considering those 2 points, having the grant and also having a tight deadline by 2025, I am not sure what to expect in this second auction. I would maybe expect less competition than the first one, but also the procurement target is lower, so it's around 300 megawatts. So it would be really, really interesting to see what's going to happen end of this month.
Absolutely. Let's find out. Thanks, Guillermo. And I'm going to put a question to both of you here. I mean, we're talking about auctions and also the point of that being that you can secure some kind of support from the government. But we also just talked before about more merchant-based revenue streams. I mean, how do these two coexist? Are there any good examples across Europe of how a battery can secure subsidies but also generate merchant returns, or are these two things really mutually exclusive?
Yeah, maybe I start here. And no, they are not at all mutually exclusive. I would say quite often subsidies or revenues from capacity markets or from auctions, rather solid base to get investors trust and to have basically to have a basis and some guaranteed cash flow, while the real money or the biggest share of money is actually made through merchant business models and the merchant part of the strategy. I think most of the I'm thinking of a single example, but it's hard to single out because this is how most business cases for batteries in Europe work, right? A lot of batteries have at least access to capacity markets. And I think especially when the market is really nascent, this is what, pops up the trust in such a nascent market that it can actually, develop merchant in the future.
Hey, Ryan, just jumping here as well. I completely agree with Eva and what she's saying. But when I was doing the battery report, we were looking into the Italy Maxe auction, the one I was talking before. And it is quite interesting that they allow you to participate in the auction, and they also allow you to participate in other markets, but they're actually limiting the amount of revenues you can get from the other markets. So I would just basically say that in generally, the capacity market auctions, these basically policy schemes, and the market revenues itself are not mutually exclusive, but you really have to go a bit deeper into each policy scheme to find out if there are some limitations.
Thanks, Guillermo. It's interesting. It reminds me a little bit of the in Germany Doppelvermarktungsverbot, the prohibition on subsidized renewables assets, issuing guarantees of origin and earning those revenues, because it's an example of where governments take a position that as a developer, you can't have your cake and eat it too. You need to choose. Do you want to go down the subsidy path or do you want to go down the merchant path? And so I think indeed, this is very much a case-by-case assessment, which we try and tackle to some degree in the report. So then let's move on. And before we wrap up the podcast, we could not talk about battery economics without talking about the supply chain and the cost side of things. So Guillermo, how are costs and supply chain issues playing a role in project development in 2024? What's changed since last year?
That's a really, really great question, Ryan. I mean, it's quite relevant because we have seen the effect of supply chain issues and battery costs in general from 2022, when we saw a rise in lithium prices. This was caused basically by supply chain shortages of this material. I would say that the market still expects that battery costs will have a decreasing trend over the coming years. But we're also seeing that the impact of commodity prices in battery costs, such as lithium, such as graphite, for example, even copper, is something to be cautious about. I think we're seeing that demand is growing fast. We have already mentioned it here about the market growth and the market size of batteries by 2030 and by 2050 even. But can supply actually keep up? We are seeing possible supply shortages of lithium, nickel, graphite in following years that could affect lithium-ion batteries. So it is quite important that developers be prepared for these shifts in the market and to obviously keep track of what is happening. We're seeing that supply chains for lithium-ion batteries are dominated by China, but the US, EU, UK, all of them are basically putting some policy in place to increase their manufacturing capacities and to have a certain control of what is happening in the market. But it's still really dominated by China. So it will take, I think, at least this decade and maybe the next one to actually shift something in the dominance of China. And I would say that, supply chain issues is something to be worried about in the next few years.
Eva, you're on the phone to developers and investors day in, day out. What do you reckon?
Yeah, I mean, definitely share your notion, Guillermo, about possible supply chain issues. But I would say what we have seen is that supply got much better throughout the last year. 1 year ago, you were happy if you got any battery to whatever price, right? And by now, the picture already has changed quite a bit. So I would say it's definitely improving and everyone is betting on falling prices. And I wouldn't be so pessimistic about that, right? Because you mentioned there is quite a large demand for battery cells. And of course, large demand always leads to higher prices. But at the same time, it's a new technology. And if I have a lot of demand and a lot of this technology produced, I'll also have really good learning rates and a lot of economies of scale, a lot of, reduction of costs on this side. So I think the high demand is not only a threat to battery costs, but actually it's more of a chance because this will really enable us to push down costs of lithium-ion cells.
Well, I'm going to take bets from you guys after the podcast and see who's willing to put their money where their mouth is in terms of rising or falling prices.
Yeah, I'll take that bet.
Definitely, I will believe that batteries will follow the same trajectory as other renewables did in terms of cost. So definitely.
But I think, Guillermo, you pointed to something which is, for me, the real curveball here, which is what does Europe do in terms of self-sufficiency and energy security in terms of critical raw materials? I mean, it's absolutely true, as Eva, you said, that we had massively falling prices in the past year, and from our investigations, partly due to an oversupply of battery cells emanating out of China. Having said that, We also know that European policymakers are focused on developing those domestic supply chains for critical raw materials. Now, the European Commission has opened an investigation into Chinese manufacturers recently to look at if they are indeed selling those into Europe at below cost. I wonder if they would do the same thing for batteries, then would that change the environment, the supply chain environment that we're operating within? Could we then see, for example, a mandate to buy batteries made in Europe, and what would that do to the cost base? I'm putting that out there as a rhetorical question. Anyway, let's move to the final question. Eva, I'm going to turn to you for the closing word. We've talked through a lot of things in terms of changes in regulation, in terms of the rapidly evolving policy environment, government support for batteries. We've talked a lot about the changes in regulations, everything from the micro changes in terms of grid fees through to the massive amounts of European money being thrown at battery auctions. If you're a project developer today and you're trying to secure the best IRR for your asset, what does this all mean? And, what are some of the strategies that you think are emerging in order for developers and investors to get the best bang for their buck?
So basically, I think answering this question, it is really important to keep in mind that what we are comparing here and what we're comparing in our report is the general market attractiveness, right? It's the general market attractiveness of standalone batteries in these markets. How much you can actually make of your battery will depend on a lot of factors, and every project that you will do, every battery project is quite individual, and depending on basically where you're coming from, which assets you may already have, or also the knowledge that you have, you can make the IRR better and the project more economic. I think there are several really popular strategies. For example, co-locating a battery with mostly a solar asset. There are even already cases where we speak about tree location. So really optimizing two renewables assets, wind and solar, together with a battery. And all of these co-locating strategies can really help you to optimize the running of the asset, but also to reduce your costs. So get you a better project economics. Also quite attractive if you already happen to have a grid connection and the solar asset standing somewhere, right? And besides that, there are also other strategies which are really, based on how you make money with a battery, because what is quite different to renewables asset is that you're basically, when you have a renewable, you put it somewhere, you spend your costs, and then basically running the renewable is not that much of a rocket science, right? Because it's producing when it's producing, and you just have to live with that, more or less. A battery, on the other hand, is flexible, right? That's why we have batteries. And how you actually run your battery and how sophisticated your strategy is in running the battery, how well you optimize between different markets, how well you, for example, incorporate virtual trading into your strategy, can make a really high difference in how good your revenues are at the end of the day.
Great. And that, could be a whole podcast in and of itself, but I think for today we need to leave it there. So I want to say a big thanks to the listeners for joining in for our Energy Unplugged podcast this week. I hope you took something out of this. We've launched the third edition of our Battery Markets Attractiveness Report for Europe. If you're interested, of course, please get in touch. We also will come out in Q2 of this year with a report dedicated to co-location strategies. So keep an eye out for that one. In the meantime, I'd like to thank my colleagues for joining us and giving our listeners an insight into the development of this report within Aurora. So thanks a lot, Eva.
Thanks, Ryan.
And thanks a lot, Guillermo, for joining us for your first podcast.
Thank you so much, Ryan.
That was Ryan Alexander, Aurora's research lead for European power markets, talking to Guillermo Ríos and Eva Zimmermann, also from Aurora. Do keep an eye on our podcast feed for more in-depth conversations with senior members of the energy industry. The best way to do this is to subscribe on whatever platform you use. Thanks for listening, and goodbye.